Hello, Gary. How you doing?
Hey Nick, I'm good, and you, buddy? Good to see you, bud.
I'm good. Glad to be back on with you. So, Gary, I was just finishing up on my show. I was talking a little bit about gold, and I don't know if you trade gold, but do you have any opinions on gold right now? And maybe we could pull up your chart. I'm very curious to see what you're thinking with this because gold has been flying, and it's been a really interesting one to watch. What's your thoughts on gold right now?
Well, are we allowed to use cuss words in the show? I'm just kidding. So, so the actually, in fact, I've got a good friend of mine that contacted me. He's actually in South Africa. He's trading. He trades a lot in gold. In fact, most of it's in gold. I don't do it as much, but I've been trying to help him out, and he's actually caught himself in some hedge positions. And I'm like, man, you got to start picking a direction. Now, we did speak about gold, and we spoke about the direction of gold a few weeks ago, and we've been talking about gold every show that we do. And we actually spoke about entry points. We spoke an entry point here to buy at 1784, and we said if it dips down further, we'll buy in 1752. We entered it also down here below, but we took profit on that. So we have been expecting gold to rally. But I'm going to say this: obviously, what's happening in Ukraine and of course Russia, the tensions there are creating this big move that we're seeing in inflation because of oil prices shooting up. So oil prices creating inflation. Gold is, of course, a safe haven for to try and combat inflation, as well as, of course, Bitcoin now becoming one of those as well. So the reason why we've seen this rally is because of the inflation issues. But I think as we start going into next month, as the Fed start taking action, we are going to see a little bit of we're going to start seeing some correction in gold. Where can gold retrace back? Well, I go back to my swings right here, and I look at the swing action that I'm seeing on gold. And I'm still seeing price wanting to move up to around about 1939. So I think we're going to be still reasonably bullish on gold until about 1939. And I think that's where we're going to start seeing some deeper correction. Now, I'm not saying, Nick, that we're not going to see some short-term dips on gold as it goes through this next couple of weeks. But I do think that the bigger correction move that I think most traders, specifically my buddy, that's looking for that correction move in gold, it's going to take until around about 1939.
Okay.
So yeah.
Yeah, and that's the thing. You make a great point with the situation with oil and with gold, that correlation together. The fact that when oil prices rise like crazy, it can be impactful to inflation. And I think that you bring up a great point with the Fed, right? The Fed is lingering around the corner, and there's a lot of uncertainty with how much they're going to do to combat this inflation. And the worse things get with Russia and Ukraine, the higher oil prices could potentially go, higher inflation. So there is a lot at stake here and a lot of pressure in markets. So when you look at a move like this, Gary, are you looking to buy? Are you looking to short? Are you on the sidelines? How would you approach if you were to trade gold? Not saying that you do. If you
Yep.
were to trade it, how would you approach actually taking positions on
Absolutely.
something like this?
Any dips in gold right now would be a buy up until 1939.
Got
Then
it.
we'll be looking for a bigger correction. So if I'm not in gold at the prices right now, I would be buying, like I said to the traders before, we were buying at 1752 and then 1784. So we're long at those levels, and we're looking for price to move to 1939. Now, if I was looking to reinvest and to add to the position, I would be only doing that on the dips. Anytime the market dips, go ahead and get in on gold again. And we're talking about these short-term dips that's going to take place. But keep it in mind, the big ultimate target that we're going to find a lot of resistance at is 1939. At that point, I would be out of gold and on the sideline and looking for a deeper correction and possibly even looking to short gold at that point in time.
And so 1939, can you show us on your chart the significance that you've got there at that specific price point?
Sure. So if you look over here, this is the largest swing from the bottom to the top right here. And if I draw it a little further down here, this is the 1.618. Now, I talk about it a lot. I talk about wave structure. And anytime the market creates a third wave move, it moves to the 1.618. And so this is the first swing right here. This is my wave one. We had a retrace move right here, wave two. This is why we said to start buying at these levels right here, because we anticipate price to go to this level right here at 1939, which is that 1.618. So that's the level where we're going to now see the market hit that level and then come back into a deeper correction move that can move all the way back down to about 1834, right about there. So that's the nice thing about, Nick, about trading these wave structures, that we can anticipate where these turning points are going to be in the market. where we can expect these big runs and these big correction moves based on these Elliott wave structure. And so this is the reason why this is, for me, a very important target at 1939. Now,
Absolutely.
just so that we're clear, when we get to that level, it wouldn't be a case of me just saying, hey, I'm going to get out of my longs, I'm just going to short the market right there. At that level, what we do is when we get to these turning points, then we look for confirmation. It could be divergence, it could be indicators that someone's using to confirm a change in trend. It could be anything that they use to identify that market is changing. It could be patterns that are forming, head and shoulders, king's crowns. Those are things that we look for at those levels. And so when we get that confirming the market's at a U-turn, then we go ahead and start reacting and start trading it.
Great, great. So that you clarified something too there. So not only 1939 is not a strict, point at which you take all your off and you're looking to just absolutely short. 1939 is a point to lock in gains and to look at a potential, hey, just be cautious for reversals, be aware of them, and be on the lookout for that. So that's a great point. Love that you clarified that too, because you made several points here. Dip opportunities, looking at them as potential buys until things blow over with Russia, Ukraine. That's part one. Part two is looking at the bigger picture in terms of where we've been coming from, the momentum that we've had, and that potential 1.618 level that you discussed, which was that 1939 level. So you've got several things here highlighted, and I love the way that you think through that. Just for those of you guys who are in the audience with us here, notice how, you can ask Gary, who is his seasoned veteran, shares his MyFX book, all this stuff. He has all the answers. He has all the answers for what he is planning on doing with his trading. Now, of course, unexpected things can happen. We can see volatility and craziness, but I love that you have those answers ready and that you're able to answer them because you've already planned out your trade. I was just having a conversation, Gary, on my previous stream with somebody who had asked me, hey, Nick, look, I'm short on Aussie dollar and I have no idea, I'm stuck in a trade. What do I do? And I'm not picking on that person, but if you don't have any answers ready at the time that you need them, it's too late. So maybe just to follow up on that, Gary, looking at Aussie dollar, what are your thoughts there? Just out of curiosity, just because it was talked about, and it's kind of a hot market right now.
Yeah, it is. And we've seen a lot of the commodity currencies rallying, like New Zealand rallying, Aussie rallying. And I'm actually in on the Aussie CAD. I'm selling Aussie CAD because I've seen a lot of confirmation that the market's going to turn and head south. So I'm actually selling Aussie CAD, a little premature, but I'm selling it. But now going to the Aussie US dollar right here, same thing right here. Look at this. This is where we said that this would be the more favorable entry point when we trade the Aussie CAD. It was down here at 70.36. So 70.36 was the first entry point. But this was where we were expecting price to move to. But it's not to say that that's where we will enter. Because if we start seeing some change in the market conditions, and you mentioned that early on, we've got these turning points in the market. But if things change and the structure changes, then we have to look at the alternative. Always have a backup plan. And I think you're right by what you mentioned about the other trader. You have to have a trading plan, right before you actually start executing. You don't go to war and then when you're at the front line go, oh crap, I forgot my weapons. You have to have all of that ready to go before you get to the front line.
Exactly.
And this is the same right here. We've got to make sure that we properly prepared for this trade, and the way we prepare is we get into the war room. We make a decision of exactly what pair we want to trade, why we want to trade it, and then where we want to trade it, and then we go ahead and execute. So we have a plan and we execute. So the Aussie right here has actually moved all the way to our target already. Here it is, 72.74. So we already hit that target, and we already started to see some pullback. And so what we were expecting on the Aussie is that client is this trader, is he bullish or bearish on that?
I think he was bearish from much earlier this week.
Okay.
Although I'm not sure. He was just a subscriber. He just commented and asked,
Gotcha.
what do you do in this situation? I figured I'd give my answer, and I'm also curious to hear what you think.
All right. Well, we got a good signal right here. Number one, we hit the 1.61, which is good. Now, that's not to say that now we're going to sell off. It's a possibility that the market's going to hit resistance, and we're going to see a sell-off. Then what we do is we go ahead and look for other things that are going to confirm it. I'm going to pull up my oscillator down below here and see what the oscillator says here. So the oscillator is not giving us any confirmation of divergence here. So we don't have any divergence sitting up on the 4-hour. But if I go ahead and put up a trend line going across here, trend line going across over here, what I'm seeing here is a possible rising wedge. So this is
Mm.
another sign, which means that we're not out of the dog box yet, because a rising wedge would need us to break out of the bottom right here in order for it to go ahead and target the starting point here. So I'm going to say that there's potential for the Aussie US dollar to head south, and we could see it heading south towards this level right here, which is our which is our first wave high. And that's important because anytime you look at a wave structure, the market, after it hits our third wave target, we can have a correction move as far as the first wave high, which is at this level right here. So that trader, if he's selling right now, he's fortunate because we've hit resistance and there's now a correction due. All right. And so the correction could take us about 100 pips down south on the Aussie US dollar. So if he's selling, he would definitely want to look to go ahead and hold on to his position, look for price to get down to that wave high. And then at that point, he may need to make a decision. If he's not in the money already, he might have to make a decision at that point, because once we get to that point, then the market might be going back up north. I have to look at the bigger picture, but it looks like it's going to do something like this and go up even higher. So here's an opportunity for traders to go ahead and get out of a bad position if they did get caught up in a sell, to get out of the bad position and go ahead and reverse and start looking to go long. And that's the biggest mistake that a lot of these traders make, is they get into bad positions. They eventually, they see the market retracing and they get a little bit into the money. They don't make a decision. They think, I'm just going to go for more money on this trade, but the trade's not offering that. And then what's going to happen is they get into a little bit of money, the market turns against them, and now it goes completely against them again. And then they liquidate, not knowing where they are within the market structure, because what happens is, by the time it gets up here, now we've got a fifth wave completion, price is now going to come into a deeper correction move. And so they get out over here because now they panic, and the market sells off, and they go, if I only stayed in that trade.
Interested in seeing our trades live as they happen? By joining the A1 Trading Discord, you'll get a notification every time one of our traders enters a position. Each trade we share comes with an entry price, a stop loss, and most importantly, a full breakdown of why the trade was taken. Learn alongside our experienced traders, join our active chat room, and ask your questions in our coaching webinars. Between our team of active traders, we trade Forex pairs, commodities like gold and oil, crypto, and stocks. By joining the group, you'll be able to keep up with all of it. Sign up today using the link in the description, and don't forget to use our promo code listed below for a special subscriber discount. Thanks for watching, and see you inside.